Right, now we had a really exciting day in the stock markets yesterday, and that's what I'm going to lead with today. Now, obviously, I've got the Dow up, and we saw some, quite significant moves lower yesterday, but the close, if you just look there, the close went back up above this 34569 area that I'm watching now. Currently, we're trading at where we gone? Currently, we're trading at 34581. So we're not far from where we left off yesterday evening. So I just don't like these stock markets. Now, I'm sure that you're going to get some form of retracement, because even though the market was tanking yesterday, we were seeing quite a few buyers coming in, but they got swept aside and the market just carried on trading lower. Although we're overbought on the short-term charts, as you can see, the monthly charts, which for most of this year have been overbought, have just started to turn down. Now, when you get these big old monthly charts starting to go in the opposite direction to the market, you have to be aware of them, because, when you look at the big hedge funds and the central banks that trade all day long, all these markets, this is what they're looking at. They're not looking at a 30-minute bar chart. They're just not looking at it. They would be looking at when is the opportune moment to go in and really start to sell. Now, Wednesdays is a high volume day anyway, so I'm expecting some quite significant moves in the stock markets today. And even though the Ftse's bounced up a little bit, really, it's got a way to go before I've got any interest in buying this at all. So if you look at that 55-day moving average yesterday, I mean, it touched it to the level. The moving average, 55-day, was at 34,989, and we got to 34,990. So, we were virtually on that level. For me today, I think it's got to close down below that 34569, and it should close below that. If it does, then obviously you're going to see a greater decline in the market. I'm looking for quite a big move lower, to be fair. I'm looking for it to come back to here on a minimum scale. And when you look at what we've done in, oh my God, the last couple of years, if you look at what we've done, we've just basically gone up in a straight line. So there is this scope. People are calling for a 5%. I think, thank you, hon. I think that it's going to be more than 5%. I think this could be quite a significant turn in the stock markets, and that won't be good news. It really wouldn't be good news. Now, one of the things that I look at also is the S&P, and I'm seeing exactly the same thing. You can tell August is a dire, dead month, because you can see the little didn't know what to do days. But since we've been back, you can see the market is just heading lower. You've got 44.03, I think. So between 44.18 and 44.03 would be your nearby targeted area. And at the minute, we're trading virtually unchanged from last night. We closed at 43. We're trading at 48 as we speak. So you really need, if you're trading these markets, you have to trade them when the underlying is open. There's no point in trading just on a retail platform overnight without there being the underlying cash markets open, because Wall Street Wall Street are the guys that move the markets. There is absolutely no doubt in my mind at all. And that's why you do get these dodgy little moves before the market opens. Now, again, you've got the S&Ps oversold on the daily charts. So, you know, if we do manage a bounce from that 44.18, 44.03 area, I think we're going to see it really captured by the 9 and the 21-day moving average, and that is coming in at 44.83 is the 21-day, and 44.99 is the 9-day. Do I think it's going to get up there? No, not really. I don't. And I think that the monthly change in direction is the key. So for me, I'm just in a sell rally mode at the moment. That's any strength that I see in the stock market, I will look to sell into. Where will I cover? Where will I think I'm wrong? I think if I see a close above 45.07 on the S&P, I might start thinking about it, or I may add. I don't know yet. Now, obviously, with these webinars that I do, the more interactive you are, the more you get out of it, because I can just go on talking about markets like forever and a day, but it's something that you really should take this chance, if you like, to ask me questions about what you're looking at, what you'd like me to look at. Obviously that will be, let's have a look, see what the NAS is changing. Yeah, it's not. So that's what I like. I like you to ask me questions. So does anybody have any questions on these stock markets that I've showed you? Now, so far, just before I ask, so far, you've got the NASDAQ holding, and the NASDAQ's holding at 15,350-ish, okay? And it's held that now for 2 days. So today we need to see whether or not that little darling breaks lower. And we won't see now for another 2 hours. So, as I've said to you, I prefer to do interactive webinars. So if there's anything that you'd like to ask me, please, now's the time to ask. Otherwise, I'm just talking to a computer, and that doesn't really sit well with me. Nothing? Don't want to talk? Can't type fast? Okay, well, I'll just go on then. So we look at the Ftse. Now we're seeing the same sort of thing with the Ftse, okay? Ftse didn't make all-time highs. Ftse never got anywhere near its all-time highs. So I would suggest that the market is going to be limited to around about this area here, which is between 70.76 and 70.91. The chart pattern is negative. The monthlies and the weeklies are negative. The dailies have come off their oversold conditions slightly. They're still not brilliant, but they are off the highs, off the lows. But it's the chart pattern for me that's interesting. You've got this sort of big mass here. Up we go, and then we can't really take any of this out, and down we come. We've edged, and what we call this is, oh, it sounds awful really, but it's like a dead cat bounce. Awful saying, but there you go. Now, get off. Now, in my view, if this market goes up anywhere towards these higher levels, this is going to go back to neutral, and you will see sellers coming in and looking to drive the market lower. With the Ftse, it's been different. As I said, it never got anywhere near its all-time highs, and Ftse does look under pressure. It really does. And if we do start to come down, you've got to look for the first level, which would be 69.71. Now, that's not that far from where we're trading at the moment. It's trading at 70.39 at the moment, so it's not that far off. If we can't hold on to that support, which I think overall we won't be able to, you're looking at the 200-day moving average. That's coming in at 6875. You do have support at 6897, but 6875 will be an area that I think will attract traders, because if we get down towards that area, you do find that when you have such a big level as the 200-day moving average, markets just gravitate towards it. And when they gravitate towards it, you have to go with them. So you've got to understand also that for many years, you've had people buying this market, and it's very difficult to change the psychology of a particular market that you're trading. It's very difficult to go from being right, buying dips, to maybe, you know, the trend has changed and we're looking at the beginning of a change of trend. I mean, I personally can't see any reason why stock markets are as high as they are, but the price is always right. And because the price is always right, we have to go with it. However, we can nitpick out of all this and pick levels where you have a high probability rate that the market isn't going to go beyond that. And this is the time, I think, that you're definitely seeing that sort of mentality in the market, is that although it's bounded up, it's being held by some quite significant resistance, and I don't really see that changing. So those are the stock markets that I look at. Obviously, there's no point in showing you something that I don't trade, because I don't know it as intimately as what I do the markets that I trade. Now, are there any markets that you would like me to look at for you, or shall I just choose and talk to myself? Gold. Now, gold's a good one. Actually, I'll show you for why. It hit exactly yesterday the 200-day moving average. The 200-day moving average was at 1808. It was yesterday, and we hit 1808. So with the gold, it's got to break that. It has to break above the 1808 area and stay above it. But what you do have on gold is this, that I picked out and I could see yesterday. So this is where we double based in gold. Obviously, then up we go. We didn't do anything towards highs, then down we come. Now, if you look at this bit, and then this, and then this, you could be seeing an inverse head and shoulder pattern, which should make the price of gold rise once more. If you just put on a horizontal line and you just click it on there, you can see that's the area we've got to break. the 1834. Now, when you're trading gold, you can do one of two things. You can either preempt this, which I would advise. The reason I advise it is by the time this thing gets to 1834, all those that bought down at 1800 will be looking to cover. So you've got that. It doesn't mean to say that it's not going to break 1834, but what it means is that at that moment, people who have bought lower down will be looking to take, if not all their profit, at least half their profit. Now, if you look at the daily stochastics in gold, it's bullish. Her RSI is doing basically nothing. We are converged on the intraday moving averages I use, and I use the 9, 21, 55 and the 200-day, but they're all around. They're between 1801 and 1797, so they're all down around here. You can see that comes in with that 50% fib level. So here is a really good opportunity to go in and buy gold. You will see people buying it if it breaks the 200-day moving average, and for me, I can't see any reason why it won't. I really can't. So I think it will break that moving average, and I think it will close above it. I like gold. I can't see any reason why gold's going to fall out of bed, especially if the stock markets go south, as I expect them to do. I would expect investors to go into gold. That's just the way I would think that they would go. So I'm quite bullish on gold, to be fair. I quite like it. So I'm looking at anywhere down in that 1801, 1797 to go long of gold. I'll add to my long gold position. Now, if we break above 1834, that's when the little old sparks would fly, because it's quite a big move. All you do to calculate how much more you've got on the top side, it's really a simple process. You take the high, so we've got that 1832, and what you do is then you minus the low, and that gives you a total of 145 points. So all you do with that is that break point there at 1834, you just add on 145, and that takes you up to, take you up to 1979. So it's quite a move, to be fair. I don't know whether it's, if you think where it's created this pattern from June, so you could see another 3 to 4 months before it got up as high as that. But that is definitely on the cards if it breaks it, because that's the measured target of that head and shoulder bottom. If it doesn't, and we stay below here, then obviously we're just going to keep doing this back in and fill in and back in and fill in that we've seen most of the last few months. Now, did that cover it, Peter, or would you like, or did you want to ask any questions in gold, or does anybody want to ask any questions in gold, or anything really? Don't care what you want to ask. It is having a consolidation, but that is the gold characteristic. Gold is very much like that. Gold has this it has this characteristic of just going up and down, consolidating, just consolidating, and then all of a sudden, bang, off it goes. Will you say you need further fundamental required. Gold doesn't really work on fundamentals. I mean, that's only my opinion. I find it one of the most, in the last 40 years I've been trading it, I find it one of the most technical markets I think I've ever traded. It's an extremely technical market, and most of the gold traders that you meet, and I've met quite a few of them in my time, but most of the gold traders that you meet are always bullish of gold. I don't think I've ever known one that was bearish of gold, but as I say, 40 years ago, the whole world was bullish of gold, apart from Gordon Brown, bless him. But anyway, that's another story. So if there's any, you know, what I think is, with gold, you can have it as like a physical thing, and I think that's much more important, especially in the uncertainty of today, that gold, silver, platinum, palladium, you know, anything that's physical that you can actually get your little sticky hands on and hold in them, I think that's much more viable than what we did before. I mean, if there was a crisis, people used to jump into government-backed bonds, which we haven't seen. They used to go into T-bills, anything that the government would back. The dollar, for example, and that's waned, you know, beyond belief, that we've seen no real buying of the dollar in this last 2 years. We just haven't, and if we have, it's been extremely short-lived. So I think there is a case for saying that gold, by definition, I think should be a bullish market. I can't see any reason why you would not want gold, or silver for that matter. So are there any other questions on gold? Okay. Are there any other questions on anything? Do any of you look at currencies at all? Well, the thing is, as a safe haven, it hasn't looked very safe. And yes, normally the yen is a safe haven. So you would have thought so. But if you can see here, look, it's been buying dollar yen, so selling yen. Same with Ftse. It's been exactly the same. There's everything we knew, or we thought we knew, sort of dived out of the window. I mean, if you look at the same time frame, you can see where Ftse did become the currency of the safe haven. It hasn't now. And if you go back to dollar yen, you can see that in the same period, you know, it didn't really materialize, and we're back to the don't know where it's going and selling off of dollars. So I don't know what it's going to do with that one. Although I worked at a Japanese bank for 4 years, I've got to tell you, I never understood them, and I still don't to this day. So I don't really trade dollar yen that much. To me, it's very manipulated and very. I much prefer dollar Swiss. I like the Swiss, and I worked at Swiss Bank for 6 years, so that's another reason why I like it. But also I like it because it's a good market to trade. In fact, you know, it's really one of the underdogs, I think. And I don't know why, because it's such a great little market. It's such a technical market, and it's so well behaved. You don't see the... What do I like about the Swiss? I like the Swiss because it doesn't get out of hand. Well, not unless the Swiss National Bank come out and say something really stupid like they did in 2015. But normally, with the Swiss, you don't get hurt so badly. And time frames, the best time to trade the Swiss, the best time to trade anything really is when the States open. I don't think before they do, you see an awful lot going on, and one of the reasons is because, you know, everybody does wait to see where the dollar's going and in what direction, and that's why trading in the afternoons is much better than in the morning. If you're going to trade in the morning, it's normally that first opening hour where most of you, I don't think, will be up. I mean, I used to get up at 5 o'clock in the morning, so you could see some good moves from when Asia closed and Europe opened, but I don't do that anymore. I'm getting too old for that. So I think mainly when the first hour of New York opening, that's what I'd say for that. With the Swiss, I don't think you're going to get badly burned. That's another reason that I like it. Whereas dollar yen, you can, and dollar CAD, obviously, it's not called the loonie for nothing, but dollar CAD can really hurt you. But dollar Swiss, it's much more sedate, it's very much like the Swiss. Okay, so if I say that, they're solid, they're steady, they, you know, they don't deviate. God help me, they don't have a sense of humour. So, and dollar Swiss is very similar to the Swiss people. And now I'm going to get thousands of Swiss people saying to me, what are you talking about? We have got a sense of humour. Maybe it was just me, maybe I just didn't see it in 7 years. So dollar Swiss at the minute, I don't think it's going anywhere. So you leave it alone. You look at it, if it gets down to 91.40, 35 area. But if it doesn't get down there, I'd leave it. You can see the stochastics are flat. You can see that the RSI is beginning to dip down a little lower, but really it's not doing a great deal. So the euro dollar is another one that I look at. Oh, God, don't. Brexit is doing all of our heading, to be fair, all of it. I didn't really care either way about Brexit, to be fair. I didn't really get involved. I knew sterling wasn't, the only thing I knew about sterling is it wasn't going to go like to below parity. I did know that because I couldn't see any reason for it to go there. Obviously, I'm not so sure now with Boris in charge. I mean, the mind boggles. But yes, we have got increased regulations. Yeah. There are shops that have actually been forced out of business because they can't get the stuff from England they want, but that's more to do with the French, to be fair, who are being, you know, real pigs about it. They really are. But that's the French. You know, that's what they do. So if they can have a bit of paperwork and bureaucracy, they'll do it. But by and large, yeah, Brexit hasn't been great for us expats over here, and it hasn't been great for some of the companies. Can't sell Germany, no. No. No, that's the problem. I don't think that people thought much about how it would affect industry and the general industry. I'm not talking about the big companies because they can swallow it all up, but I don't think they realised how it would affect you in the street. You know, I don't think people gave it consideration, but you know, it is what it is, and we have to live with it. So I can't get, I mean, I'm a Londoner, really, but I am. And I used to be able to get chilli deals over here. They used to come over, and I used to trops off to the local fish shop, and they would be there once a month. They are now not. So personally, I'm pretty unhappy. And you can't get English stuff like pork pies and all the stuff that used to be sold in Iceland. That's really struggling. Yeah, I think by and large, we who live here have said a bit like thumbs down to Brexit, to be fair. But it's doing all right on sterling, and that's basically all that matters to the powers that be. You know, I think they're quite happy that sterling's up at 138 and it's not down at like 0.95. So with the euro, and the other thing I'm hearing, which is quite disconcerting, I'm hearing rumblings about the Bundesbank restarting. Now, in markets, we do like a bit of buy the rumour, sell the fact sort of thing, but these guys that are telling me about this Bundesbank are not known for starting rumours. So I've known them for decades, and it's something I'm going to keep my eye on, because if the Bundesbank is being brought back together, that's Europe screwed. God knows how they will pick the bones out of that one. I've got absolutely no idea. But if this is true, and the Bundesbank do reform, then obviously the Bank of Spain will have to come back in, and there will be no ECB. So we'll have to wait and see. I don't know. I trust him. I just don't know who's told him that. And when I don't know who's told him that, I have a problem. But the euro dollar is doing nothing. But if it's going to do something, now's the time to do it, because you have got this base pattern here. You can see that, you know, if I go back, euro dollar, it's been a bit of a mishmash for this last year. And if you look at the longer term, it's really not done anything. It's gone sideways. Now, I know when you're trading it, it doesn't seem like it's going sideways, but when you look at it on a bigger time frame, you can see the sideways moves. But this little one here, it's the same as what I said before on the other market. Okay, what you do is you just put on a horizontal line and you wait and you see what happens around that line. Again, the same sort of thing. You want to be buying down into weakness down here around about the 117.95 area. I think that's a good enough area to go long. Put your stop, I would say, down below here, which is at 17.65. So you'd have to go a little bit further, because we know the algo, those lovely little algos, they do love to trip you all up. But, you know, it is above the 55-day moving average. It did try for the downside, and it couldn't stay down there. And it, on that day when it went down and made a new monthly low, it actually closed back up at the highs. And when it did it, yesterday and still couldn't break up and close the lows. You've seen today it wants to go up. So there is this uncertainty in the euro. But while it's above that 17.95, I think I'd favour the market going higher. So are there any other questions on the euro? Do we just go through some more currencies, or anybody want to look at oil? Or, you know, this is your time. This is your time. I'm not the sort of person that will do a presentation to you. I don't do presentations. There's many that do PowerPoint ones, but I'm not one of them. I like to get you all talking and asking questions from me. No? Tell us some interesting stories about working at the banks. Oh my God. Well, oh my God, there's just so many. I started off working for Life before it opened. So I was working for the London International Financial Futures Exchange before it opened. I was working there for about 9 months. And open outcry was amazing and really, really set me up. But I didn't want to work for the exchange anymore. I wanted to be a trader. That was it. That was my goal. Even though I kept being told I couldn't be, I wasn't allowed to be. I was a woman, patted on the head and sent my way. But I didn't deviate. I carried on, and I actually finally did become a trader on the life floor. I worked for a company that was in commodities, which is there I come as I look at some commodity futures. We were all futures, obviously, and I traded the 30-year bond market. So that was in itself, which was one of the largest markets in the world. And that's when I first got into technical analysis, really, because everybody was looking at the bonds of being bearish, but every day I looked at them, they were going up. So I had to, I discovered this guy around the back of the booth one night. He was updating his charts, and I asked him what was he doing. And he said he was looking at charts. I'd never heard of it. He showed me a 30-year bond chart, and it was like a light bulb flashed. And that was it. That was me on the way to becoming a bond trader of any substance, if you like. And I did that for about 5 years, and then I went back. I went back to Midland Bank. I started working for Midland Bank on the floor. And then I was asked to help set up a technical trading desk back at the office, back at Midlands Bank office, which is I did, and that was around about 1986. And oh God, stories, yeah. Well, I worked at Nemura after Midland. I mean, Midland was quite, to be fair, we was one of the big 4 banks, so we were quite well respected. But Nemura Bank, oh my word, oh my days. They were money laundering. The Japanese finance minister was being held to ransom by the by the Japanese mafia. I mean, and one of the funniest things, it really was, I can't name names, I wished I could, but we had a really senior guy that came with us from Midland Bank, and what they didn't know, he was fluent Japanese because his father was in the American Navy, and they were based in Tokyo. So until he was 17, he spoke Japanese all the time. So we'd go into these meetings, and I was their first lady manager, and they didn't want me to be, trust me. But we'd go into these meetings, and what they had a way of doing was actually talking English and then going off in Japanese, and then talking English and going back off in Japanese. And, you know, my friend used to say, my friend used to say to me, okay, we'll meet downstairs 10 minutes. And we, yes, dear, so, oh, yeah. And we'd go down there and we'd find out that they were, you know, they were doing such dodgy things, really, really dodgy things. And it's all in a book, and it's called The Rise and Fall of the Nemura Empire. And when I got offered the job, it was the #1 job in the world. So we had people from all over the world. We got our Dolly Yen guy from Citibank San Francisco. You know, we all came together, this team of 8, and we were starting off. No, I knew his wife, and I know his then best friend. He's talking now. He's giving. You've got to laugh, haven't you? He's giving lessons in. He's giving after dinner lessons in trading. But my ex-boss on the floor wouldn't employ him. He said he wasn't psychologically fit for the pit. Anyway. And so he never worked in London. He was only in Singapore, and I never worked in Singapore. But, you know, bearings doing bearings. Yeah, so the Japanese, and I don't suppose any of you remember, when the 1987 crash. Oh, I know. I feel it as well. When the 1987 crash happened, the word went out, you will buy the Nikkei, right? And now, and as it transpired, one of the reasons was because the Japanese finance minister had invested all this money, mafia money, into the stock market. So chaos was reigning around us, and we're buying everything that we could possibly buy. It was insane. Anyway, Nemura got found out. They got found out for all sorts of shit. Our chief dealer, our chief manager, forex manager, got 5 years for fraud. I mean, really. So I've tried since 1996 to lead a quite normal life, although hasn't really happened. But yeah, great. You're lucky to have me, because I've been trading longer than you've been alive. Wow. That's made me feel really old. So, my friend Danny, who is Nick Leeson's friend, he put him on a plane to Frankfurt. We had a fancy dress, and he had his jacket, so he went as Nick Leeson with all his with his mnemonic badge and his cards. Quite amusing at the time, really. Anyway, sterling. I like sterling. I do. I don't want to do anything with sterling at the moment, because it's in this consolidation, and things that are in consolidations we don't really want to touch. And if I'm honest, I think at the moment most of the action is going to be in these stock markets. These are the ones that you really need to look out for, the levels that I've given you, because they are going to be important. And you know, I don't want you to miss what could be a really great rundown. Now, Friday we've got what we call triple witching. Do you know what that is? Have you heard of the term triple witching? Okay, I'll tell you. Triple witching is when you've got cash, and you've got futures, and you've got options, and the futures and options expire. So this all happens Friday, okay? So those of you who have not heard of that saying before, be aware of it. It only happens once every 3 months. So although you can trade options you can trade options on a day-to-day basis, but I wouldn't advise it. But the options correlated with the futures contracts, they all expire Friday. So you could see a flurry in the opposite direction where people are getting out of the SEP contract and getting into DEC. Okay? And as I say, that happens Friday. Now, I think I've overrun time, to be fair. So is there anything else you would like me to talk about before I disappear off and get ready for Wall Street? No? I don't think these webinars are meant to discuss Maggie Thatcher or dodgy banks. I think they're meant to be educational. Mind you, that is educational. She was on the floor. I will tell you this. There were 2 people on the floor and the whole of the time that I was down there who, it's hard for you to imagine a floor with 4,000 people on it who actually don't give a damn. And that's the only way I can say it about us. We didn't anything went, didn't matter. Everybody was fair game. Everybody was fair game. And one of the reasons where the managers upstairs didn't want to bring people onto the floor was because they would get absolutely trashed. There were 2 people that in my whole working time down there who that didn't happen to. One was Margaret Thatcher and one was the Queen. And the floor was very, very respectful to both of those people, both of them. And they weren't to anybody else, not one person. Everybody got absolutely trashed. You know, I remember Tony Blair walking around ducking cards as they were being thrown at him and people shouting and hollering and calling him all sorts. And because we were floor traders, nobody actually told us we couldn't do that. So we just got on with it and did it. But so apart from wanting to know about Maggie Thatcher, you're all right. I've gone over most of the markets that you want to trade, yeah? Correct? She got me into it, really. It is quiet, but it won't be. It won't be. I have a real feeling about September's normally a very good month for trading, although we haven't had a great start. But it normally is, you know, because the first quarter of the year and the last quarter of the year is normally when you make your money. So we have to wrap it up now, apparently, which is great. Thank you all for listening. Thank you all for being there. Okay, I hope you've enjoyed it. I will catch you all later. No probs.